All right, everyone. It is Monday afternoon, and we're looking at the market on a 60-minute bar, and I'm looking for a couple of trades here. First of all, my long trade, I'm looking at 2.0269 with initially a 37 pip stop. That will take the market just below these lows here. For my short trade, I'm looking at 2.0218. Over here, the stop is going to be just a little bit closer, just because of the nature of the pattern here. This bearish wedge, you see here the highs pushing down with a 28 pip stop. Again, this is pretty aggressive. If you're looking for a more conservative stop, you could set it at about 32 pips. You can see that's not much of a change. It's just the nature of the way the market is forming up here. The lows are staying even while the highs are pushing down. That's why I think a 28 pip stop is more than adequate to account for any kind of volatility. Meaning if the market breaks down and then comes back above 28 pips, I really think that the market's going to start moving back up. So what we're looking at here is a bearish wedge type of pattern. And you can see here the highs are moving down, the lows are staying even. Some traders will say that because of the market pushing down here, that means that they're likely for the market to push to the downside. You know what? I don't know. We've had quite a big move here of late. So whether or not the market is going to continue, of course, is completely up in the air. But we've got to remember we have support over here from early in July where the market's triple top was broken. You can see that when it did break, that single day was a big up day. And then also back here from April, this was the prior wrong tool. This was the prior high, which of course at that point was a 15-year high. So you can see that's right below where the market's at. So we're just trading into an area where I think if the market can break through, we're going to have a big move to the downside, more than likely challenging $2 again, so maybe a couple of hundred pips, and of course below $2, and now you're coming in more than likely into this area here, which is a band that runs from about 9,900 down to about 9,690. So a very wide band of support if the market can get down there. So this thing might continue on. If you are still short from last week, you can see that the market really is just kind of consolidating here under the moving averages. Nothing really showing much in the way of a reversal.